All right, so we all saw the headlines about the military operation in Venezuela, right? But what if the real story wasn't really about politics at all? What if it was actually about a very specific kind of oil and the hidden gears of the global economy? Today, we're going to look past the news reports and do a deep dive, a real systems analysis of the powerful forces that were truly at play here.
This quote from our source material really sets the stage. The argument is, if you are focused on the helicopters and the military action, the big spectacle, you are looking in completely the wrong place. The real story, the one that matters, is all about the economics. It's about the balance sheet, the global systems that made this whole thing almost unavoidable.
So let's break that down. We're going to look at the two very different stories here. You've got the spectacle, the one we all saw on TV, and then you have the balance sheet, the story that was actually driving everything from behind the curtain. Now, the official story, of course, was all about democracy and human rights and taking down a corrupt regime. But this analysis we're digging into argues it was something else entirely. Fundamentally, it was a debt collection operation with gunships. It wasn't about ideals. It was about a desperate move to control critical resources and to protect a very fragile global financial system, a system that revolves around the US dollar. Okay, so let's peel back the first layer of this whole thing. And it all starts with oil. But, not in the way you might think. This isn't about the amount of oil America produces. It's about a much trickier problem. It's about the specific type of fuel its industrial engine was built to run on. And this is where you can really see the problem. It's a fundamental mismatch. See, the US shale boom produces tons of this champagne oil, light, sweet crude. It's high quality. But its most important refineries, the big ones down on the Gulf Coast, they were built decades ago to process cheap, imported oil. They're designed to run on diesel, that heavy, sour crude that Venezuela has more of than anyone else. The two are just incompatible. You can't put the wrong fuel in the engine.
So the natural question is, okay, but can't the U.S. just dip into its emergency stash, the Strategic Petroleum Reserve, the SPR, to cover the difference? Well, that's where this problem gets a whole lot more serious.
Because that safety net, it's pretty much gone. The source material shows that the SPR has been drained to its lowest level since 1983. Get this, a mind-boggling 180 million barrels were released in 2022 alone, mostly just to keep gas prices down. So that emergency reserve, it's just not there anymore. Now, this oil problem, it doesn't just exist in a vacuum. Nope, it connects to a much bigger and frankly, much more fragile system, the one that holds up the US dollar's role as the world's currency.
For 50 years, this has been the absolute bedrock of American economic power, the petrodollar system. It basically forces every single country that needs to buy oil, which is every country, to first buy US dollars. This is what gives the US that exorbitant privilege you hear about. It lets America borrow and print money in a way no one else on Earth can.
So how does this quote-unquote magic trick actually work? Well, it's a pretty simple four-step loop. Everybody needs oil. To buy oil, they have to buy dollars. That creates permanent demand for dollars. And that lets the US finance its own debt and basically export its inflation to the rest of the world. It's been an amazing deal for America. But according to our source, the key players are starting to walk away from the table. The magic is starting to fade. And look, this isn't just some theory. The numbers back it up in a big way. The dollar's share of global reserves has literally plummeted from 71% back in 1999 to just 58% today. That's not some random market fluctuation. No way. That is a deliberate, coordinated, global shift away from relying on the dollar. And this weakening of the dollar, it's happening at the exact same time as another huge global shift. China's incredible economic rise, especially in a place that was once considered America's undisputed backyard, Latin America. The scale of this economic pivot is just staggering. Just look at this number. China is now driving over $500 billion in trade with Latin America every single year. That is a fire hose of investment that is completely reorienting the continent's loyalties.
In this table, wow, it tells the entire story in just a few lines. In only 2 decades, the whole economic map of South America has been redrawn. For the biggest economies on the continent, Brazil, Chile, Peru, the United States is no longer number 1. China is, period.
Okay, so let's recap. We've got the oil problem, we've got a shaky dollar system, and we've got China making huge inroads in the region. That's the backdrop. So the big question is, what was the final straw? What was the trigger that made this operation happen now?
Well, according to the source material, the intelligence suggested Venezuela was just about to pull the trigger on a financial nuclear option. It was about to start selling its oil, the largest reserves in the world, remember, in a basket of currencies led by the Chinese yuan and using China's own payment system to do it. This was seen as a direct existential threat. It was about to prove that a major oil country could officially and permanently leave the petrodollar system.
So, the raid happened. You might be able to call it a tactical success, but the analysis argues that the bigger picture, the strategic fallout, is incredibly complex and deeply uncertain. What happens next? That's the real question.
Washington is now looking at basically 3 possible paths forward, and none of them are easy. You've got the best-case scenario, a controlled transition to a new government. You've got a chaotic fragmentation, where the country breaks apart like Iraq or Libya. Or you get a long, drawn-out proxy battle with China. And the scary part is, it's not at all clear if there's a real plan for any of these outcomes.
And this brings us to the ultimate paradox, the real kicker of this whole thing. The very operation that was meant to preserve the dollar's dominance has actually sped up the global rush to get away from it. By using force to defend the dollar, the US has sent a loud and clear message to the rest of the world. Holding dollars makes you vulnerable. It basically just proved the argument for everyone trying to build an alternative system. And this leaves us with one final, very provocative thought from the source. A truly powerful country doesn't need to use force to get resources, it secures them through partnership and trade. So in the long run, when people look back at this, will it be remembered as an act of strength or as a sign of desperation?